everybody. Welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, as always, keep in mind that there's risk involved with each trade that you take. So you want to manage risk in a way that makes sense for you. And we'll go over some ideas in that regard if we find a trade or two to simulate. We have some nice tools in our order window within the web trader and our app that makes the risk management side of things quite a bit simpler. It calculates your exposures for you, potential profit, etc. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into the WebTrader platform, and that allows you to trade on both MT4 and MT5 accounts from one location. And every feature, all the things that we look at within our WebTrader are also available within our app. So if we log in here in the upper right-hand corner, we'll be in the WebTrader platform. And our focus is technical analysis, obviously, with this session. We should talk a little bit about what's been happening fundamentally. Quite a bit of volatility the past couple days. A lot of movement on gold, no doubt. A lot of opportunities for profit with a lot of the instruments moving quite a bit. Gold in particular, a lot of traders finding nice large movements, but you have to manage the risk side of things. That's for certain in order to avoid damaging your accounts. So it's important, the risk management. We'll take a look at how to do that, like I said, within the order window. And we'll look at some opportunities that maybe look good from a technical perspective. Now, where's a lot of this volatility coming from? A large part of it is the US still is in a government shutdown. They have not funded the government now for a couple weeks, running on 3 weeks almost, I think. And they still seem to be at a large impasse, the right and the left in the US. And I believe the left has something like 1.5 trillion they want to add to the spending, and the folks on the right that actually are in charge in terms of the House and the Senate with the majority want no part in adding any more spending like that. And so they're really kind of stuck, and that's creating some volatility. We see the US 500 here on the screen is responding quite a bit to that, and we've had momentum because of expected rate cuts coming in the US and a slew of data that has come out from earnings numbers that have looked pretty solid. And so that was the momentum that came up here and could, at the end of last week and continued this week, trying to get near the all-time highs, up just a bit higher. This is a resistance level near the all-time highs, but we just haven't been able to break through, and a large part of that is what's weighing on the equities is this government shutdown situation in the US, and that kind of spills over then into the markets globally as well. So we can see the DAX, the German 40, the Asian markets as well had a little bit of trouble today. But nothing huge. It's not like markets are crashing and selling off in a huge way. So we want to keep that in mind, that there's a bit of jitters out there on the market for the time being, and keep that in mind as you're placing your trades. Now, I did see a slew of data that came out of Great Britain, all pretty much of it below expectation, which normally would be kind of bad news, but what was below expectation was the inflationary data. Now it does show maybe a slowdown in demand, but at the same time, it certainly shows that inflation is under control. So the CPI data and other data that came out showing lower inflationary numbers than expected, and that then maybe should serve to strengthen the pound potentially, because inflationary numbers being higher than expected means the currency is getting weaker in reference to products that you might buy, and because prices go up during inflation, meaning you need more of any one currency to buy the same thing, which means the currency is being devalued when inflationary numbers are higher than expected, and today they were lower than expected. So if we look at the GBP against the USD, it had a time where it was pulling down today, but we saw kind of a big rush up as well. And so maybe we look at a chart with the pound on it. I think a US index makes sense, like the US 500 to look at, and maybe something like crude oil, because the crude oil inventories came in out of the US today much lower than expected. Instead of going up by a large number, they actually went down, which actually shows demand for crude oil if the inventories shrunk so much more than expected. And so we'll take a look maybe at crude oil as well to look at the technical side of things. Now in the US 500, we could look and see if there's a signal. It's a buy signal. Why would that be with all the fear about government shutdown? I think probably because most people feel that they're going to solve the government shutdown eventually, and that it's not going to cause too much economic harm. And I think that's probably true. Now, so what else is there? We already talked about it. If the fear of the government shutdown is kind of, every time they hold a press conference, which happened just a couple hours ago, or less than 2 hours ago, that seems to be when the market pulls back. And so the Republicans held a press conference, talked about how stubborn the Democrats are with the government shutdown, and down came the US 500. That's this drop that we see here. There is a buy signal. Support level was breached, which is right here at 67.45. But if it pops back above there, then it's a buy signal again. So if we draw a line at 67.45, that's pretty much exactly where the price is now. Okay, that was the pivot level in that signal. If it goes below, they're saying maybe it'll drop further. If it's above, they're saying perhaps it'll go back up. So if we take a look at the bigger picture and see that there's been strong uptrending this week, what you might do is say, if this does break back into an uptrend on the smaller candles, then maybe you go with that signal. And so let me get rid of some of these other lines I drew. And if we go to smaller candles now, we can start to do our own technical analysis. Here's that pivot line, and it's dancing below it, back above it. If we go to the 5-minute candles, we'll maybe see that better. Okay, it dropped below the pivot line and went down further. Could have had a take profit if you're selling below the pivot, as they suggested. It already pushed down to the take profit zone down there. This comes back up, breaks above the pivot, and starts to go up. It's weaving below the pivot line. So the markets are trying to decide, will this go up or down? And so if we look at a little bit larger picture, we can see that this is a support level back this direction. So this is the pivot line that we drew. This is where it's weaving above and below that line. And we see levels of support here and here where it climbed. And then when it broke this level, after holding for multiple days, here and here, once it broke, it plunged. Okay, and now we're back up, tested it here, back below, tested it again, and came down. So this certainly looks like an important price level because it either holds or can break and plunge, or it's acting as resistance as it did here, and then pushing back down. So the market's trying to decide, will it go above or below this? The original signal was a buy. Okay, so that if we want to try and go with that buy signal from Trading Central, but filter it and say we'll only buy if it goes into an uptrend, well then what we're looking at is coming back down to the smaller candles and trying to decide, technically speaking, when would this be considered an uptrend? And what I can say is if it goes above this price level here, that feels to me like this downtrend has ended, and it's certainly bounced up off this pivot level, which we drew here. Okay, so let me just get this line out of here. And so if we're looking to try and buy on the signal, but want an uptrend to confirm, then we would do a pending order. So execute when price hits. If it goes above this level here, 67.56, so 67.60, take profit, if you get in here, it could be up near the high here that it was at already today, 67.87. Stop loss could be back down below this pivot level from the signal, below 67.45, so 67.40. And then we can look at our risk management. So the potential profit is greater than the risk, 2,700 potential profit, risk 2,000. And that's even with waiting for confirmation of a breakthrough uptrend before entering. Okay, entering at 67.60, which is above this line. Okay, entrance here, 67.60, which means it has to break this high point and go into an uptrend and be above the pivot line. Right now it's below the pivot. The alternate signal says to sell, which you certainly could do as well, getting your stop loss back above this level here. But because it's the original signal was a buy, and there seem to be some reasons why there's positive sentiment for the week, perhaps this negative sentiment's a temporary pullback. So I'm leaning towards going with the original signal as a buy, but you certainly wouldn't have to do that, and you actually could go both directions, which I'll simulate for you if you wish. So we've got this set up. Now the question is this trade size what I want? And this is where the risk management comes in. And perhaps I only want to risk 500 per trade, or 1% of my balance per trade, or whatever that might be. And so if I do a quarter of a lot, now I'm risking 500, which is less than 1% of my balance, and I'm trying to make 675, which is more than 1% of my balance. And there's nothing magic about 1%. You can risk more than that, less than that. But the point is, you should be able to understand what is your risk and potential profit before you set up a trade to take, okay, before you actually enter the market. So I've got this set up only to enter if an uptrend comes back, and I'm looking at a take profit at this level up here, 67.87, so it doesn't have to break today's high in order to hit the take profit. And if it enters, it would have to go down and break below this pivot line in order to lose. Okay, so technically speaking, this is set up only to enter if a technical uptrend kicks in. And so this is a strategy that many technical traders use in order not to trade against the trend. Now, could the fundamental news change? Absolutely. And if it does, perhaps this keeps dropping, maybe more rapidly than it already has pulled back. And in that case, you would never have entered the trade if that's what it does right now. The other side of this trade is it did drop below the pivot line. And so you also could do a market move as a sell, because technically speaking, it broke the support. It's below the pivot. So I could put take profit down here at the next support level. Let's say in this zone here where there was resistance, and then support in this area before going up. So 67.19. Just as an example, stop loss, if I enter now, just needs to be above the pivot. So 67, let's say 50. The pivot line is the resistance that it just is below now. It's the old support that it broke. So potential profit 2,200, risk 900. It's a nicer ratio if it does keep dropping. I can take a bit larger trade and risk still only about 1% of my balance. 0.7, let's go 0.6. I would make 1,350, risking less than 500. Okay, I could even go a little larger, 0.65, still risking less than 500 to make about 1,500. So we're below the pivot, going after a further drop towards the take profit zone from the alternate direction on that signal. Again, I feel like this is trading against the larger momentum of the week, but it is possible, since it broke below the pivot, that this could continue to drop. So we've got a trade in. Technically speaking, it makes sense because it's a downtrend that just broke the support level which is the pivot level from that signal. And so if you look closer at those signals, US 500, okay, yeah, it's a buy signal, but it says sell scenario. If it drops below 67.60, which it did, it says look for downside with 67.35 and below as targets. Okay, and so that's exactly what we did. We did the sell scenario because it broke below the pivot. So we're going with the current technical trend as it sits now, but understanding some reasons why it could reverse and setting up with a pending order for the original technical signal, which was a buy, if indeed it does technically confirm an uptrend again and break back above that pivot level, the distance that we set it out. Okay, and so with this setup, we could lose one and win one and still be an overall profit. We might only have one trade and win if it keeps dropping. So we'll see. It's an okay scenario either way, if you can at least pull out 1 out of 2. All right. Any questions, comments on that setup as a 1-2 setup? 1, going with the current momentum, technically speaking. 2, setting up for a potential reversal in case it does decide to recapture that momentum from earlier this week, Monday and Tuesday. I'll pause for a moment to see if any questions. Okay, and if I see any pop up, I'll address them as I see them. I mentioned crude oil. Crude oil is one of those things. There are so many fundamental factors that can move crude oil that sometimes you just look at the technicals and try and decide. This is certainly this opening here, the gap up today. That's a sign of strong momentum upward. We see it's trending up the whole day. It didn't go up and pull way back down. It's just trending up. The signal on crude oil is a buy with take profit suggestions up near 60 or a little below, 59 to 60. So it feels like this is a move to buy on technically. The technicals are showing that, and we already talked about the fundamentals. The crude oil inventories came in much lower than expected in the US. That tends to be bullish for crude oil prices. If the inventories are lower, that's a sign of higher demand, less supply. And so in general, basic economics would mean potentially the price could go up in that situation. Okay, so and there's some other factors out there, tension with Russia, Iran, potential sanctions on their crude oil if Iran doesn't conform to some of the international demands, etc. So there are a lot of reasons why crude oil could bounce. If we take a look at, say, 1-day candles, if you do think that's a strong enough uptrend, technically speaking, to bring you in, you can see the line I drew a while back, that's a resistance level, and that's exactly where the signal is. They're saying that to take profit, that probably if it gets to $60 a barrel, it might find some resistance and have a little trouble going up further. And that's why, because that's a resistance level from a week or so back where it hit and then dropped. Okay, so if we then set this up according to the signal and also according to what we see here on the 1-day candles, take profit up near 60, stop loss. Let's go back to the smaller candles to work out a stop loss, maybe just below today's low, this support level here, where it came down, hit, and bounced. So we're looking at, it's not today's low, but below this support level, this was a breakthrough candle here that went up and then found support and kept going. So if it breaks below this support, then something reversed. So below 58, we could be looking at 57.90. And if it breaks below this 57.97 to 57.90 down here, that would establish a downtrend on the 1-hour candles, and perhaps that's a technical reason why you would then give up on the move. With this setup, we're looking at not quite 2 to 1, but near that potential profit compared to potential loss. If we go, say, 2 lots, we're risking 1480. 1 lot, half of that, 740. So if I'm trying to be around 1% of the balance I have here on this account, then I might do 0.6, 0.7, and that's less than 1% of the account. Going after near 2%, and then I'm in. Okay, so everything's risk managed, it's set up, the technicals make sense. I've got my stop loss right down here. You would have to break this support level in order to hit my stop loss. I see that as a good technical spot to have a stop loss, because if it breaks this price level, technically speaking on the 1 hour candles, then that's established a downtrend by breaking this support level. And in which case you could see further dropping quite easily. And so it makes sense from a risk management strategy, if you're just doing short-term type moves, to not keep chasing it if the momentum reverses too strong. And so that's a setup. Probably would have been nicer to get in closer to the support level when it was down here after the initial breakthrough candle, and it found support. This would have been a nicer spot to get in, but let's see. Right now it's trying to pull back maybe a little bit. We'll see what happens in the bigger picture with crude oil. Now, what else could we look at? Some interesting movements, but because we talked about the pound, we can look at GBP USD, and let's see where this is set up now. As I kind of expected, we see the pound go rushing up after initial pullback. This was when gold was selling off earlier today. The USD was strengthening as gold was selling, because the money rushes into the USD as huge amounts of gold was sold off, strengthening the USD. I don't think this pullback had anything to do really too much with the pound itself, because if you look at a chart of Euro USD or Australian USD, it looks the same. It was the USD strengthening, not so much the pound weakening, but we see a really strong rebound with the pound. I think part of that is related to the fact that the inflationary data was much lower than expected. And so what that means is each pound, it has more value than if prices aren't flying up through the roof. Prices are in fact even coming down, so any 1 pound buys more things. Relatively speaking, it's more valuable as inflation comes down. So that helped play into perhaps this rebound of the GBP. Now what we can do is take a look and see what is the current signal from Trading Central, and it's a buy. Doesn't surprise me, but we've had quite a rush up right now. It's kind of like the crude oil. You know, had we done this webinar a few hours ago, we'd be in a nice profit already on crude oil as it was above that support level. We got in a little late for the purposes of simulating some trades in the direction of the trend. But you know, ideally, same with this, you'd have wanted to get in closer to this pivot level, the support level here, which is at 133.28. That's down right about here. Okay, so this is the spot deemed the support level, and if we look at larger candles, we'll probably see why. Okay, on the 1 day candles, if we're looking at 28, we see it here. Okay, this is the line I just drew. This one here, 133.28, that's the pivot level here, 133.28. So if you're wondering why would that be a pivot level, you follow it across and you see here, 1 day candles, it hit once and bounced up. It hit twice and bounced up off that price. It hit 3 times and came up, and 4 times. 4 1 day candles and could not break that price, coming back up. Here it did go below and back up, but it found support in this area for a few days and back up. So this was deemed an important price level, technically speaking, at Trading Central. And you just don't see it when you're on the smaller candles. You go to 1 hour candles and you're wondering, well, what's so special about this price? Because all you see is that it went below it and back above it. It's not the movement today that determined this as a support level. It's those 1 day candles from quite a ways back, okay, weeks back in time. So this being deemed an important price level, The question is, if you wanted to buy on this still, do you buy from the current price, which is pretty much at a pretty major resistance level? Okay, this was support on the 1 hour candles for a number of hours and then broke below with a lot of momentum. So this momentum shows that it took pretty big news to get below here. So what kind of news would it take to get back above this price level? Same thing, you're going to need some momentum. So I understand it didn't reach the take profit zone yet, but it did reach a nice resistance level, and it's kind of hard to buy from a resistance level after all this upward movement occurred already. It feels like it wants to pull back. But if you wanted to go with this signal and you feel like it might carry out, again, probably a pending order makes sense. So you wait for it to break the resistance, sacrifice some of the potential profit to wait for confirmation of an uptrend. If it gets to say 133.80 or so, then it's broken this support level, this old support level would be well back above that, then indicating a technical uptrend again, above this, what is now resistance level. So if we get to 133.80, and this is more of an art than a science, you could say 133.78, 133.82, but in general, if we get above 133.80 or get to that price, I see a technical uptrend at that point. So 133.80 maybe convinces me that that uptrend will continue. And if not, and it pulls back, then I'm not in on that trade anyways. I don't care if it drops, I'm not in it. I'm only in if it confirms this technical uptrend. So you see, as I'm following these signals from Trading Center, I'm not just following them blindly and entering, hey, it didn't hit the take profit zone yet, so I'm going to follow the signal. It's still an active signal. I don't follow them blindly. I take a look and see what's the fundamental situation, what's the current technical setup, what percent of the way towards that take profit did it already move, and maybe what's the best way to make sure I only enter if it confirms itself many times is the way to do that. So I'm looking at 133.80 as an entry, potential take profit up here. The next resistance level I see is here. Okay, you see support, 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 then it gapped down, and then that was resistance. So if it gets up near 134 flat, that looks like a potential nice take profit location. So maybe 133.98, just before that number. Stop loss, if indeed it enters here and climbs, it shouldn't go back below the pivot line, or I'm sorry, this resistance level, which is an old support level. If it breaks through that and it's a true breakthrough, then it shouldn't go back below there. If it's a nice breakthrough and climb, a reversal of this. Okay, this didn't look back. Once it broke, it kept going. So we're hoping once it breaks, it keeps going. If it does pull back, not a big loss. Stop loss back below this, what would be support level if it's back above that price. So somewhere below 133.70 might make sense as a stop loss. So 133.68, and we're looking at potential profit then 1,800, potential loss 1,200. And it's not always a greater possible profit than possible loss. Sometimes it's the other way around. It's just the way these are setting up technically. So now I just need to adjust the trade size. So if I do 3 lots, I'm risking 360. 5 lots, that's kind of in my wheelhouse here, just a little above 1%, approximately 1, and 1.5 times that for the possible profit. So 900 possible profit, 600 risk. If I'm comfortable with that, then I'm ready to go. And again, this doesn't enter unless the uptrend confirms itself and hits our price. Okay, it has to come up here and catch the correct price. If this just pulls back towards this pivot level here that we drew, that we looked at on the 1-day candles, if it pulls back here, maybe you think about re-entering down here. Okay, so 2 possible entry points. One, if it breaks through and confirms the uptrend, you're in. The other, you could put a pending order down here just above this pivot level, which was the 1-day candle support level from the past. and have a pending order here to buy if indeed it pulls back and you want to get in the buy direction. Clayton, you're asking, can we use this with gold? Yeah, we can look at gold. So as we look at gold, gold had such a climb. I mean, wow, what a climb it had. And it's maybe in many people's eyes overbought. And I think that's part of why once we started to see some selling, it sold pretty hard and came down quite a bit. Something just closed in profit. Okay, well, maybe we'll look at that US 500 trade of some kind. Anyways, if I'm looking at this and saying, I might possibly make a trade on it, I've got to look at the bigger picture here. So this was the all-time high. It came up and retested it again. Then we had a big move down this week. This was the start of the week. It gapped down, and we've had movement downward ever since. 4,000-ish has been the support level now that it hasn't been able to break. So let's draw that out. Get rid of some of these extra lines. Okay, here's our new support level. Right down around 4,000. Okay, so 4,010, we see support here. Once it got above, first of all, back here, we see 4,010. Support, if it was below, it was resistance. Once it got above, it was support again and up. Okay, again, came down, hit this price exactly at this spot and back up. So this looks to me like the sell-off on gold has subsided in terms of the momentum. Looking at the 4-hour candles, that's a nice bounce off this support level, and it looks like it wants to climb. Now, could it reverse and drop another $100 an ounce? Absolutely. Gold has shown us it can do that. But from a technical sense, this is a nice support level, and it's bouncing. And that's a technical uptrend that has started on these 4-hour candles. And so if you want to make a move on this, but you're afraid it could plunge, but also you feel like, wow, it could go up $200 an ounce, you can protect yourself because it's such a volatile asset. You could do 2 days protection. You could do, say, half a lot, which is huge for gold, right? Half a lot for 2 days, $2,400 for the protection, but the potential profit, if this goes up $100 an ounce, which it easily could, you're talking 5,000 profit, more than double the cost of the protection. I think that's a bit pricey for protection, to tell you the truth. It's quite a bit to pay up front, and it's because of the volatility on gold right now. So you might be better off just doing a stop loss below 4,010. And it's climbing as I'm speaking, so we're losing entry. But if I go down, let's say below 4,000 and say 3,990 as a stop loss, and my take profit I want to put up at, let's just say today's high or this week's high, which is here, without being too greedy, without having to break into the gap here, we'd be looking at 41, say 50-ish for a take profit. Okay, so I'm looking at better potential profit than risk, but now I just need to adjust to the trade size that would make sense to me. And again, the take profit is right up here where it started the week without having to break above this week's high. So what we then take a look at is changing the trade size to be the amount of risk that you're comfortable with. So if I do 0.2, I'm risking 1,300. 0.1, 717. So if I'm trying to get around that 1% risk, 0.08, I'm risking about 550 to make 730. Okay, now you could expand this and you could say, okay, maybe I think it'll challenge the all-time high again now that the sell-off is done, because you still have a lot of concerns out there about government shutdown, about inflation coming back, if the US is planning to lower interest rates more, which they've kind of said they do kind of plan to do that, which could weaken the USD. So it's maybe multiple reasons for gold to want to rush back up towards these highs that it was at less than a week ago. So if that's the case, you're looking at 43.70 as a potential take profit. You could even be less greedy and say 42.50. And now we're looking at triple the potential profit compared to risk, okay? Without even going to the highs, pulling this down to 42.50 would then just put us near the top of this gap here, okay? Where it was this last Friday and even below that. So just to the top of the gap right here brings you triple the risk, okay? And so if you trust the support level, not a bad move. You don't have to stay in all the way to 42.50. If it gets to a profit you like, you can obviously get out sooner. But trying to take advantage of maybe the current momentum as you see it, the bounce off the support level, a nice technical support, while understanding it easily could break. So we're risking less than 1% of the account, but trying to go after maybe a 3% gain on the account. Sometimes AvaProtect is the way to go with gold because it can be so volatile. But with the way gold has been moving, the rates on AvaProtect right now, it's a bit higher than I think I would want to pay for the trade size that I was looking to take. So there, you have risk management options with our platform. Sometimes you'll see AvaProtect, the cost is really cheap for a one-day protection or 6 hours protection, etc. And many times that's the way to go then. So it's just, you check how the market prices are and things, and then you go with what makes the most sense. All right, everybody, I think this is a good place to stop. We've been going for about 40 minutes. Any questions, comments before we end things? Okay, great. Thank you all for joining. If anyone ever wants to watch any of the past sessions or rewatch the current session that you're attending, by the next business day after each session, all of our webinars are uploaded to our YouTube channel, and you can take a look, go through, rewatch, etc. And like I said, you can watch the past sessions, and other presenters as well are posted up there. So those are there for your viewing as you see fit. All right, everybody, thank you for joining, and good luck with your trading. Bye for now.